Thank you, Mr. Hemanan, for your insights on the digital advantage in outperforming the competition. All of you here are part of companies that sell products or services, and advertising certainly has to be part of the mix. Now, what's the best way to advertise anything? Get Kabir Bedi, of course. But the next best way starts becoming more complicated. You know, I began my career in advertising, working for Low Lintas and Ogilvy and Mather for 5 years. But the tools that I learned then have been enormously eclipsed by the mix of technology and megadata and the entire change of the media environment. So in a changing world of advertising especially, it's good to speak to a guru. And we're going to ask Martin Sorrell, legendary ad man, ex-founder of WPP, CEO of S4 Capital, to explain the new rules of advertising. He'll be talking to Joseph George, who's CEO of Tilt Brand Solutions. So please welcome Joseph George and Martin Sorrell.
Delighted to hear you got your schooling in Ogilvy and Lintas. So we reflect
in a way represent both of us. So.
Part of me is Ogilvy and part of him is Lintas.
Thank you for that.
Very good. Thank
you very
much. Thank you. Before we start, can I, first of all, I want to thank Joseph for putting his head in the lion's mouth. We blame a joint friend with it. But let me just say this, at the risk of annoying the sponsors or the organizers, if any of you got questions for me or Joseph, my email is SMS, stands for Sir Martin Sorrell, 142, 14th of February, 142 @gmail.com. Send me your question and we'll try and cover it in the 20 or so minutes we've got. Joseph.
So he's SMS and I'm WhatsApp. Bad joke, anyway. So this is, Martin, your 35th trip in the last 10 years?
Not the last 10 years. I would say probably must be about 45, 50 over about 30 years, I say, to India. So India is not my second home. I couldn't claim that. And I couldn't claim great knowledge because you have far more knowledge than me, and most people in the room, if not all, have more knowledge than me. But I have a profound love of the country because I think Kabir called me the ex-founder. I will never be the ex-founder of WPP, the founder of WPP. And WPP's position in this country, as you know probably to your cost, being part of one of the competitors until recently, WPP has a 50% market share here. So the one country in the world, was 113 countries we were in, or they are in, and the only country where we had a more dominant market share, I shouldn't use the word dominant, but I will, dominant market share was Vietnam, where they had 80% of the market. So this has been a very profound, and the Indian advertising marketing market is a very different one, as you and I were talking about before, because it's really a paradox. You have very strong traditional media brands like our hosts and others. So very strong traditional media market,
They may take offense to that, though.
No, but which continues to be very strong. But at the same time, you have a sort of second channel of digital strength, mainly around Bangalore, but throughout the country, and then outside the country in Silicon Valley. Yeah. You know, I attend a conference for a couple of years of Indian entrepreneurs on the West Coast who've built small, medium, and large-sized businesses. So you have this dichotomy or paradox of strong traditional media, which we're seeing a weakening of newspapers and magazines. We're seeing a weakening of free-to-air television in other major markets. But India, which is a major market and will continue to be it will be the most populous country on the planet. It will not be as rich, obviously, either on a per capita basis or absolute basis than America or China, you know, who are at, 20 trillion and 11, 12 trillion in terms of GDP out of 72
That's
trillion.
nominal.
Yeah, that is dominant. So the Indian market is a really interesting one because it has this paradox in it.
And your frequent trips have nothing to do with you being hands-on and a fan of over-supervision?
I was always accused of, or sometimes accused of being a micromanager. I took that as being a compliment, not an insult, because I don't think you can run businesses by remote control. Yeah. And in our business, which, well, WPP had 200,000 employees. We now, having started S4 Capital, we're listed on the London Exchange. We have a $600 million market cap already. We have 1,200 people. We will, as I'm speaking, announce our entry into the Indian market. Will be the 15th country that we've come into. We're setting up a new model here, which we'll come on to. But India, for me, is really an important market. A couple of journalists have asked me in the last couple of days in Kochi at the IAA conference and here whether India will be in our top 5. And I think the answer to that is that depends on us. India, you've got going on in India, from a media point of view, some really interesting things happening. You have the traditional players, but in addition to that, you've had the rise of Google and Facebook, which have put the traditional media companies under tremendous pressure. Often people talk about putting the agencies under pressure. I disagree with that. You know, our biggest client, or one of our biggest clients at S4 Capital and at WPP is Google. And therefore, there is a sort of symbiotic relationship. I did describe it historically as frenemies, but they have become friendlier frenemies over the years, particularly around issues like privacy and brand safety and interference in elections. That's put pressure on them to be more open, particularly to the regulators. But you have them. You have, obviously, a company like Star, which now is even more powerful because with the combination of Fox and Disney, it becomes even more of a phenomenon. And then, you know, on the other flank, if you can put it like that, you have Jio and Reliance, you know, a $100 billion company, probably one of the most outstanding, if not the most outstanding company in India, with Indian operations, pure Indian business, tremendous strengths in India in terms of infrastructure in all senses of the world, in terms of influence. So you've got an interesting sort of battle and mix taking place. So you and I have talked about this, and I think you feel that the traditional media in India will retain their position for a longer period of time probably than I do. I think the digital transformation and revolution that Punit referred to and that the chairman of Capgemini, Paul Hermelin, referred to, that transformation is going to put the traditional media under such pressure that the model that you're developing in your new company and we're developing at S4, which is around what we've called for this session, maybe somewhat inadvisedly, the Holy Trinity, is really important. And that is Holy Trinity with first-party data. That is the data that the clients in this room own at being the core. And that driving the development in a 24/7, always-on environment of digital content, what we call dynamic creative content, and driving programmatic, that's algorithmically driven media planning and buying. So those three things, I think, are key. And I just amplify a little bit. I don't know whether we have anybody from Netflix in the audience, but Netflix probably is one of the most, not the most, necessarily, advanced models, which uses the data that they have about you and me and Joseph to drive, in our case, in our content company called Media Monks, develops dynamic content so that we can literally have assets at scale, millions of potential creative executions, depending on what your media behavior is. And that first-party data informs that media behavior, and we place the media.
So going back to the S4 model, tell me, what is it about consumers and clients of today that you think the S4 model is relevant and timely?
Well, from the consumer point of view, I mean, if you're running a campaign now, people always talk about tentpole, or let's call them the big event, Super Bowl, in the case of India, IPL, Formula One, World Cup. I'm on the IOC Commission, Olympics, every 2 years, every 4 years. Winter Olympics doesn't play that well in India, so I should say every 4 years. But maybe T20 will become an Olympic sport at some point in time. But the need for tentpole or significant brand campaigns has lessened in an always-on environment. And the best way I can put it is this. You know, we have the Prime Minister here tomorrow. He is about to embark on an election campaign. And I draw the parallel between what FMCG companies, auto companies, pharmaceutical companies do to a political campaign, but without an election date. So you have outgoing messages to consumers, and you have a lot of incoming, often missiles, figurative missiles from your competition. So the real challenge is to develop marketing campaigns which are iterative. They're not static anymore. You don't call up the agency and spend 2 weeks trying to get a date for a conference call or a meeting, 2 weeks to brief the agency. The agency creative department comes back and says, we need more time, the brief's not deficient. It's not iterative in that sense. What you do is you have an overarching big idea, you develop the content in a assets at scale as I described basis. So you have numerous potential executions, and you feed those executions to the consumers on an iterative basis, and you improve them on an always-on, real-time basis. That's the difference. So it's like running a political campaign. And the clients have really changed their attitude. And this might be a strange thing to say, or one of the strange things I'm saying, but I think you compare what's happening today in advertising, certainly in the client-agency relationship, to Brexit. If any of you followed Brexit, you'll know that the campaign, the exit campaign, the Brexit campaign, the tagline was "Take Back Control." Dominic Cumberbatch played Dominic Cummings, who was in a film recently that went through that campaign. And Dominic Cummings, his tagline was "Take Back Control." That is exactly what clients are concerned about. They are concerned about, and Paul Hermelin referred to data. Data is the new battleground. It's not the oil, in my view, it's the new battleground. The 5 major companies, I'll come on to, I think you could describe them as 7 or 10, Google, Facebook, Amazon, Alibaba, Tencent. Those are the fearsome 5. The 7 sisters, you add in Apple and Microsoft, and you add in the 3 software companies, Adobe, Oracle, and Salesforce. Those 10 companies are really at the heart of the digital ecosystem. And what the clients are seeing now is a world where there are walled gardens around data, particularly in those fearsome 5 or the 7 sisters, but particularly the fearsome 5. And because of the privacy issues, because of the fake news issues, because of the brand safety issues and the interference in election issues, the walls are going up. And the big platforms are saying, who dominate advertising, they dominate digital advertising. The digital advertising world is $200 billion. It's about 40% of traditional advertising, which is $500 billion, and about 20% of the whole shebang, which is about $1 trillion advertising and marketing services. The figures are illuminating. Google last year did $125 billion of advertising revenue. Facebook, despite the issues facing them, did $52 billion as clients switched from Facebook to Instagram, people forgetting that Facebook controls both those platforms. The third is Amazon, now at $10 billion, growing rapidly, $2.5 billion a quarter, but way down. Microsoft about the same, and Snapchat probably about $400 million. That gives you an indication of the dominance that those businesses have. The walls are going up. They're saying because of privacy, we can't share the data. And our clients are very concerned that they don't have the relationship with the consumer in a digital e-commerce world that they have to have. So that battleground is critically important. So I come back to the model that Joseph and I are building, Joseph in India, and I'm trying to do it on a global basis. It is around data, and that fuels content, and it fuels programmatic. The other issue, and I referred to take back control, is that clients feel that in a world since 2008, since Lehman, where GDP growth has been less, ironically and paradoxically, than before Lehman. Why? Because inflation has been under control, and that has reduced pricing power amongst our clients, and therefore there is a focus on cost and efficiency, the rise of finance and procurement. And that has put pressure on the organization, and resources have been reduced. So whilst the need is to improve internal capability around data and content and programmatic, marketing resources within inside our clients has been reduced at that time. So now there is a feeling with that shift around data to the platforms that clients should take back control. That's effectively, I think, what's happening.
So a follow-up question on data. So to me, there are two issues. So there's the issue of data privacy and there's the issue of data secrecy. Now, data privacy, for all the reasons that you said, regulatory authorities, governments are under pressure. What is the implication, therefore, on analytics? I mean, will analytics be able to unleash its full potential given this constraint that is either coming or already there? That's part one. Part two is on data secrecy. Clearly, marketers are beginning to realize the criticality and the preciousness of the first-party data, especially. Given that, are they going to hasten in housing? And therefore, then what is the implication on agencies?
Well, first of all, in the model I described, there's the three parts, the data, the content, and then the media planning and buying, analytics and data analytics are critically important. But I think what clients are also looking for in that world that I also touched on in the previous part of the discussion, they're really looking for a model that is faster, is better, and is cheaper. And whilst that might sound like a glib phrase, that resonates every time we make a presentation to clients, whether it be in the last couple of months, a P&G with Braun, a Nestle with Starbucks, an Avon, the Olympic Commission, McLaren, whatever it happens to be, it resonates very deeply. Faster, because we're in an always-on world, where it's, as I say, almost like a political campaign. Better meaning more engagement with technology. We're agnostic on technology, and I think we should be, but we will use AI, VR, AR, voice, whatever it is, as effectively and efficiently and aggressively as we can to implement marketing messages. And lastly, cheaper means more efficiently. And related to that and to Joseph's question, transparency is absolutely key. One thing about the Indian market that is also different is the lack of transparency, the opacity of the media markets. It's not quite as bad as Japan, where I think it's true to say that our clients still do not know what the price, the actual price of a television spot is because of the oligopoly or the duopoly that exists in Japan in the agency structures. It's not as bad as that. But what the clients are demanding increasingly, particularly the global clients, but increasingly with the demands for efficiency the local clients too, is the need to know what that digital ecosystem and traditional ecosystem consists of, and all the moving parts in it. As money moves from publisher from client to agency to publisher, that is critically important. So understanding more. So that leads me to thinking about S4 in the following way, just to wrap up. One is purely digital is the focus. Even in a market like India, that is becoming increasingly important. The Economic Times have modified their assets very aggressively to embrace digital. That's one thing. Faster, better, cheaper is key, absolutely key, with transparency. Our structure as an agency has to be unitary. It can't be vertical and siloed. It has to be brought together into seamless execution. And what we do to that is create unitary structures. We have done no earn-outs in the 2 major transactions that we've done since we started 6 months ago. We have done deals not on an earn-out basis, which we practiced at WPP for 33 years, because it creates too fragmented a structure. Both deals have been done on the basis of half shares, half cash up front, with the owners of the business having strong equity interests. So the unitary, seamless structure is critically important.
So therefore, the implications on ad agencies and holding companies, I mean, how will they need to evolve?
Well, I'm looking at time is up, but I'll just try and deal with this. So okay. the 6 basic holding companies, which the largest of which was WPP, or is WPP, not by market cap anymore, but certainly by revenues and profits. The 6 holding companies are under a lot of pressure, and they're broken into 2 sort of groups. You've got the 2 Americans, Omnicom and IPG, continuing to invest in their brands. And you've got the 2 European companies, interestingly, WPP and Publicis, so the big 4, if I look at those 4, who are consolidating their brands. Consolidating their brands, you know, it fulfills spreadsheet analysis or what I call seagull management. I won't go into the details of what seagull management is. I'll leave it to the imagination of the audience to figure that one out. But it's for tidy minds. But what it does do is it creates significant organizational disruption in the short term, at least. It may actually destroy value in the long term, but 1 + 1, you put 2 brands together in our business, 1 + 1 does not even equal 2. It often equals 1.5 or 1.
In fact, we spoke about this. If you look at all the holding companies on an average, they've acquired 50 to 75 companies in the last decade or so. And I don't think more than a third are actually integrated into the core.
And that's because it fulfills the response of tidy minds. It doesn't necessarily fulfill. So what Omnicom and IPG are doing, I think, in the short term does better. The big issue, the big analytical issue, is whether it does it in the long term.
Yeah.
Okay? I think we're going to be hauled off the stage now.
Okay.
Thank you very much.
Thank you.
Thank you.
Thank you, Joseph. Thank you, Martin, for sharing your knowledge and updating us on the latest in